We're in for a quickie this morning. Welcome to the Breakfast Club. We got about an hour and a bit to catch this quick little reversal and small little run back into this range. I'm looking for a run higher and then perhaps take these highs out and then give us a reversal for a big dive down today. That's ideally what I'm looking for. So just moving into risk-free now. I want to see this candle act as support. I want to see a candle close above this, use this as support, and go higher like that. I want to see it come back into here no more than the mean threshold of that candle. I'm in it just under the wick there at a risk-free trade, looking for the equal highs above us. So I hope you all had a good night. You're all doing well. On a 5-minute chart, there's no real sibbies above us. You got this relative equal highs, and we have this spot right there. That's where I'm going to aim for on the 5-minute. So I've got box to box running here. We'll see what we get. Let's close that part down. Let's make sure we are live. We're up and running. Okay, we got 3 people with us this morning. So we caught the reversal, that being this little swing low. We're into the discount portion of the larger range, and we've hit this first D1 level right here. Get a nice reaction off that, create a swing potential with a bull trap. We traded above it right here, gapped down into it, caught that there, and now we're looking for this bull trap. We closed above it, came back, gave it a little tap. Now we're looking for it to continue going higher. So these relative equal highs are the target. You could target P1, 2, 3, 4. They're all sitting up there. So, but there's relative equal highs above us. I like those. So if you're doing a take profit model of 1, just take your fib tool from the high here to the low. %, so you can move this to 50. You pay yourself there. I've only got 1 on, so we're just kind of going at it slowly. Morning, Hadi. Ali, good morning. We're meeting up on tomorrow, correct? Hadi, you want to meet up on the 15th or something? Correct. Okay. Yeah, it's just an hour or so. Derek. Okay. I think Russell has access to a car, so we can. I know we're not in the best area of town, apparently. I don't know why the IB decided to book us in a shady area of town, but it's the closest I guess they could get to the school. The cheapest hotel they could get to the school. That's what I think it is, but whatever. Either way, we are mobile. I think Russell was saying he's got access to a car, so we can all meet up somewhere if that's not the best area. It's good by me. And I'm sure Russell's game for that too. I think he's only a block away from me. His hotel's a block away from me, so I can walk over there. Morning, Hans. Han Solo. So I'd like to see this candle right here, this little up close candle, hold price. What have we got in the other little areas here? So you got relative equal highs above you here at 66.50. You have a premium box at 66.47, but you got to get up there to inside this range. You might have a little tiny one sitting in here. Let's have a look. Yeah. You got a little one up here too. So I run into this range. If you want to see it pop through these two candles here and start using this next one as support to reach for that one, and then eventually these equal highs above you. So this, you want to see this happen here. You want to see this breakthrough here. Same kind of setup here on the NASDAQ. I don't think there's any gaps in here though. You want to see this come back and find some support and start pushing for this premium level. And on the lower levels, there's lots of little places it can reverse on and still leave this intact. So highs taken. I got a little busy here. If I start to close below that and take this out, I'll close the trade for now. I'll just leave it. I'm just below the 50%, so if we do come down, chances are we can retag this, take me out, and then go higher. So it should be really sitting right here, just below that level there. Now I've traded below here. Got a change in direction. I'm back inside this range now, and I've just tagged it. So if that was a take profit model 3, I'd be out right there. So I just want to see if this holds. And then this is the line in the sand, really. I don't want to see that mean threshold get traded through, which is the full fill of this BISI here. And if you look at this small little range that we're in right here, there's a swing point there to there. 50%. If we come back into this small little push here with a swing, then 50% puts us right on top of that BISI. I want to see this little sucker hold though. Yeah, I want to see a bearish move today too, Dirk, but I want to see it come back up here into 930 and take out the highs first and then drive it lower. Give us a nice little Judas swing thinking that we're going to go higher, and then take everybody outside. And like all these people who want to go short, we want to clear them out. And then I'm targeting D2, you get all this down in here. So from here to here and D2, trade below that and keep pushing lower. I'm looking for, I really want to see a big tear down. I want to see us take out that 106 or 160 and start driving right down into 23,958 to 23,713. Yeah, I want to see a huge move down. Another 1,000-pointer would be delicious. So now we've got this little reversal. I'm expecting this next leg to go higher. So now I don't want to see it skip below here. So I'll lock in a bit more profit. Again, if you're using your take profit model, that would be 70%. You'd be moved to 62%. 75, you'd be moved to 70. You'd be paying yourself 78, move to 75, and then that's it. Your trade will be done until you're through the premium level, and then use the premium level for support to go higher. But we've got an objective, and we're using a different method. So right there, you'd be out. 80% of your trade would be off. You can leave 10% on, the last 20% on to run. You've paid yourself on the way up, and you're at an optimum trade entry reversal situation. So that's an internal range liquidity hunt from entrance to wherever you decide to exit here on the way up. That's using the first model. Second model would be a box to box trade. So that little tiny spot you see sitting way up here is a little spot there, or you have above 50%. So you have P1, P2, P3, and this would all be P3, and that's almost completely filled now. So you'd be scaling out on that, and that'd be box to box. So that'd be take profit model 2 completed. Take profit model 3 now would be just when I see a change in direction, like here, that would have been a take profit model 3 out and done. But you have to consider also the 50% of the small range that it could retrace back into. So I was giving it at least to down here, and now we've got another stretch on the leg. So if you take the leg that we see and we just do this, and these are not always accurate, but they give you a rough estimate of where you see price headed for. So that puts us right in that 1600 range, which puts us right in to our premium box here. So if I take the bottom of the premium box, that puts us right in where that leg is there. So that should pretty much finish our trade. That'll be a box to box trade. And then we'll be done, and then we'll go see Hadi and the boys. That'll be our day trade for the day. That'll pay for the plane tickets. GBP. Let's have a look at GBP for my man. My man Derek, what are you looking for GBP to take out? Where? Looking for, what'd you say? Take out the August low. If you look for British pound, to look for those seasonal tendencies for that October low, and then look on the daily to see if there's a reversal on the daily. Look to target down here, Derek. You're looking somewhere in here. Look for this gap, this price imbalance. There's a natural gap there, and this just all downside delivery with a gap here. So include it all in your daily analysis and look for a retracement into that. That would take out all these lows, hit a discount box, and then look for any reversal in here in October, November. And look for anything in here that shows, as soon as it hits that box, start looking for the 4-hour reversal for the October, November swing. That's what I'd be looking for. Good morning, Craig. Good morning, Abs. Yeah, it may not make it today. It may take, you got to look for that over the next, it could be the next week or two to get down there. But either way, we're deep into October, November, beginning of November. That could reach into that. That we could reach that in 2 days. Who knows, right? We could reach it this week. But just kind of keep an eye on that area, and then I start looking for a target, looking for any reversal. If you don't get it, if it runs through it, just look for the next one, and that'll sit around 126.37. And then if you go through that, start targeting this whole area over here. But again, you just wait for the reversal, or if you're going to catch this below this low, look for a retest of this level right here. So if it get a nice clean displacement below here, look for a fair value gap to form below here, a retest of the fair value gap, and then go lower, all the way up into half this wick, or even this SIBI here. Those would be the things I'd be looking for if I was in British pound. Look for those kind of trade setups to appear, candle formations to appear. So again, displacement down, take out that low, create a fair value gap below it, use that as an institutional order flow entry drill on the daily. Then you go down to the 1 hour and 15-minute charts for a reversal as soon as you see that formation starting to occur, and look to see if you can catch a continuation down into this box here. That would be a nice little a nice little short. If you don't get that immediately off this wick, look for the lows, look for the reversal off of this. And if you get back through that level, then we're looking for this candle here to provide some support. If not, it'll let go, and then you'll start running back into, I would imagine, running up much higher. That would be the low of the, if you just get a sweep on this, that might be the low of the October. Just running out these August lows, August and May low, creating the low of the year. It wouldn't be the low of the year, it'd be the lower of the since the last half of the year, at least. And then see it run up. So that's what kind of like what I'd be looking for there on a larger scale. For what that's worth for you, Derek. So there's the premium box right there. See that? Box to box, completely dusted and done. So now you can close out your trade there. Wait for it to close above that and go higher. So I'm going to sit right here. You look at this range here now. Again, we're back to the same situation. So you take this range and you say to yourself, if that's my high, I could retrace back into 50%, which is right where my stop loss is. So 70% is a full retracement back into this level here. As you say, do I want to give up that much profit? So you get out exactly there. That would have been a nice, right here's your entrance. So you have here, and number 2, you wouldn't have had 2. You would just had a 1, scale in 1 there, and then full profit out there and move to the sidelines. And then if you get back up on top of that, we'll look for the highs and then for the next premium gap. I'm just trying to shoot for a 5-minute and trade for that premium. So keeping in mind, right here has not been revisited. So I'm out. I can see that coming all the way back down there. I'm going to take that out. You can see that coming back down into this. We've just broken this high here, so we can come all the way back into here, which is a retest of this cluster before going higher. So now what you look for is a reversal. Here's a 50%, so you go down to a 15-second chart, and you look for a reversal here to run for the highs, or a reversal off this level, which is a 5-minute retest of this level. We have not got a retest of that level yet, so we could come back all the way inside this small little range, leave all this intact, then finally run it up right at the open and take it up. So that's kind of like what I'm looking at there. So now typically when you're doing box-to-box trading, people think, well, why don't you just wait for the highs anyway? Well, because you never know if you're going to get them, because you might just get that rejection block and it roll over and come back down. So if you try to risk that, at least pay yourself at the premium box. And once the premium box is filled, and you, let's say you got out right there and you wait, and it goes above, creates a fair value gap above it. Then you go, oh, that's fine. Then I can get in here and I'm a little more confident that's going to go higher and not reverse on me, right? Or if it just gets a little candle above it, then I say, great, we've run the highs out. Is this going to reverse on us now? Or is it going to create a fair value gap and run through our premium box and then start running lower? So there's a much safer way of doing that by just paying yourself at that level and wait to see what you get as a reaction off these highs. If it blasts right through it and you miss it, you miss it. And you don't cry over spilled milk. That's all there is to it. Because that wasn't the only time that ever happens in trading or will ever happen in trading. So if you get upset over that, it's wasted energy, man. Wasted energy. Too many overlapping arrays for me to bounce around inside right now. So we'll see if we got this level get taken. So it's back to the same situation we've talked about before. Here's your SIBI, right? And we don't have a BISI on this side, but we have a price imbalance from here and here. So it would be like we want to see it close above this level, find support, run up to here, take that out, and then find support off the 830 and keep pushing higher. So you see how it's just coming back into this little swing point. We traded below it. We've come back inside it. Now I'm looking for this to run lower. There's 50%. So you can see why paying yourself up there is kind of, that was like $1,200 or something like that. So we took it out at 9. So think about how much you're giving up here now inside this range, right? So if this decides to go higher, And we look on a 15-second chart. So we're just going to look on a 15-second chart for a continuation. So I want to prove my point here. So what are you looking at? What kind of trade setup are you looking at here? Following the rules that we adopt on every other chart. We want to see market structure shift. We have a discount array and we have a premium array inside that range. So now I want to see it tap that, hold it, and go higher. If it eats through it and it's just come back into these lows and it wants to come lower, then optimum trade entry 70%. What else? What other little targets can it reach for? Reach down into here for a box-to-box trade inside a larger range. I'll be looking down here at 88%. So you watch and you say, I want to see a structure break, get back above here, then I'd be a little more happy to see it reach into this premium level again and then go higher. So just a retest. We've dropped below this level, so you could see that wick up in here one more time. And this little consolidation and then go lower. And if it breaks lower, then you just got to switch over to a new set of rules every time it breaks a new low. Switch over to your rules. Your rules constantly keep switching back and forth depending on what you see price action doing. And if you're not comfortable with what you see in price action, and you don't say, okay, well, now we're breaking this low, I switch to my next set of rules. I want to see this low get tapped, the open, a wick. If there was a wick in there, I'd start analyzing the wick. If I didn't get a retest of that right away and it keeps coming lower, then great, let it rock, baby. Are you glad we got out up here now? So there's your 79% trade entry. Look at that. So it has left those intact. So the perfect exit would have been right there for a box-to-box trade. You can see why my box-to-box setup is an amazing, accurate, and it's a safeguard built into it, right? Because when you go box-to-box, if it does reverse like it's doing right here, right now, all that entry that we had, which was on a 1-minute chart, look at it. Our entry was down here. Look at how much we've lost in our trade. We're back into a couple $100 again now. $300-400. All because you were gunning for that and it didn't work. But it did hit the premium box right there. Like with perfection, 656. Right? You can't ask for a nicer exit than that. Other than 656.5. That would have been a nicer one. Oh, it was 6.65. There you go. What's the low on that candle right there? 656.5. That's the perfect, and that's the high in this candle. 656.25. It literally nailed the 0.25 of the premium. Or somebody might say, well, maybe it's just filled in this SIBI. Sure, I'll take that too. Either way. There's the 88 we looked for. It hit the 88 and we're getting a reaction off of it. Remember, when we go back to our 15-second, there's the 88. And then all it did was just come back and fill this imbalance right here. So now we wait for this and a structure break. And hit it perfect. It's not a sexy box-to-box abs or what? Yes, I have them marked on my chart there, Hadi. I'm so tempted to take it right now as a short. I'm so tempted to take it right now as a short. I see you, buddy. I see you, buddy. Yes, totally bearish. Agreed. No structure break. Bear trap or bull trap here said nope. So we'll wait for the 930 open and see if we get a swing below this low and then a punch back up and clean these highs out. Ideally, we want to see the highs get taken. Retail may be looking at this as the ceiling and saying that's holding price back to go lower. That'd be a nice opportunity to punch through those guys, take out the London high, and then start rolling over. So now I'm going to sit and wait until the 930 open. And then I got to get out of here soon. When I get to the airport, I got like an hour or two before my flight. So I'm going to sit there and keep an eye on this. And if you're doing that 3 a.m. candle, Hadi, look at the downside. Look at all the ones on the downside. The targets. There's so many down there. You could just one by one just say, well, I'm going to put 1, 2, 3, 4, 5, 6. Put 6 lots on and take 1 lot off at every one of those on the way down. You make a killing. So far, this is a 15-second chart, still supporting continuation on the downside. We have not had any market structure shift yet, and we've got a break. We just keep breaking these lows, and now we're through this discount portion. So again, adopt the next rule. Retest inside this level here. There's 50% of it right there. Nice retest. Come lower. Watch the same thing occur here, all the way back to a retesting this level, and keep coming lower. That's a 15-second chart, by the way. Let's look at a 1-minute chart. Now this level, aren't we glad we took it out up here? Wouldn't it have been so much, wouldn't you be just like peacocking around your house if you would have nailed that spot perfectly there? So this is when you say, see when I drew that price leg higher, said, oh, it's aiming for up here. It's not a certainty. It feels like more of a certainty if we get above our premium array. But our premium arrays hold, man. That little quarter, this little quarter level right here is all it took to hold it on a premium. So why didn't it reach for this little guy here? It's not a premium BISI, that's why. That's why I like BISIs versus the SIBIs. And if you like the SIBI, then fine. There's SIBIs right there. It's a nice, pretty close to a fill anyway. I think that, yeah, it's the same fill. $482. What was you sitting at? What's at 482 that you're so interested in there, Hadi? 482. All right here. No, that's 500. Oh, look at this regular trading hour gap that's just popped up here. Wouldn't that be delicious if it ran all the way up there? Right into 920. That would be pretty close. All you'd need is another 936. 920 works. 920 works. A full fill of that regular trading hour gap and then reverse off that. How's that? That'll make both Ollie and I happy. Or run up first and then slam her down. So premium box inside this range now. So we've hit that premium box to box. Now we're looking for this box retested right here. So box to box. There's a D1, D2 down here yet still. Just wait for 9:30. We could have a crazy ass reaction out of here. So if you make your market money pre-market, then take your winnings, move to the sidelines, and wait. Back to this breaker. Come on, send it up now. Take out this candle. If this is a D1 and it's 50% or lower, then there's D1 there. 2, 3. Send it. Send it. So now the trick is, if you just left your stop loss down here, like Michael likes to do, you'll leave it down there and he doesn't care about these retracements. He's got a goal and he figures it's going to get there. And you see all this retracement here. For this internal range liquidity hunters, you're looking for this run down and you're looking for here to enter and you're looking for this to act as a bull trap. If it doesn't, and we trade through the mean threshold of that candle right here, come back and use it for support, then we're looking for it to push down into the next breaker, the next objective we're looking for, or D1, D2, D3, whatever you're looking for down there. So you're still collecting on the way down. And then when you see it reverse back through this candle, you go, now I want to see if this candle gets reclaimed from above, like this right there. Once we break through it, we reclaim that breaker right there and then send it higher. So this is pivotal when you break through it to look for support. And then when it breaks through on the other side and reclaim it again, that's what I like to see. Reclaiming that breaker and push higher. So like I was going to say, if you've entered in here long and you've got out short, where do you say, well, where do I enter back in again? Reclaiming this breaker isn't a great idea, or wait for this to close above, which you just did there. If it comes back and taps it, you catch your long here and you look for these equal highs above you again, like right there. So I would do that, but it's right at 9 o'clock or 9:30 is open. There's the retest right there. Now let it go. I want to see this open here and shoot up now, not come back down. And that would have been a nice perfect entry right before the open. I would have my stop loss snugged right up tight to that case. It comes back on you. Let it rip now. But that's so now we exited here. We've got back in a lower price. So you made money on the way up. You're back to risk free. You put some money on and you're back inside this range. So here's the open. There, I'd be out. See that little rip back against you? Don't trust 9:30. Wait for the open. So if you're inside that range and you got in here, you pay yourself on the way up, 62%, whatever. Take profit model 1 would have saved you here. And that's why you wait for 9:30. Now, if this just rips from here and leaves all that intact for later, that'll be a hunt for a red October. That'll be much later. You may not get that today, guys. It may just drop right on you. There's the discount box 2, 3. So there's P, D1, D2 in here, D3 right here. You're into D3. Now let's see it pull back. Come on, Ollie, put a little influence in there. Yes, agree with you, Ollie. I've been burnt on days like this. Must be clean. Yeah, wait for a nice, perfect setup. Follow the rules and just wait. Be dangerous. Early shorts might get wrecked. Yeah, if people want to go short here, there's a lot of shorts lined up here to go shorter. They're all jumping in on the bandwagon that this is a massive run down, like on the hourly level here. They're all piling in on this to run down. So what a great place to bring price back into. If you're looking for a discount box inside this range that we've just created now, like this little price leg that we've got from here to here, all this discount, like people are looking at that and saying, oh, look at that, we've got a rollover, we're heading lower. This would be a great time now to push this back through this level, find support at that candle, and drive it all the way up into this level here, that premium box. That hasn't been tested. This hasn't been tested as the little breaker. And you could say it's all inside this one. Either way, none of this has been retested. We ripped through all this one. This is the only one that's been retested. Right there. And that is in the discount portion of that range that we're in right now. So you want to get above that and hit the premium. The premium is Candyland for me in the hourly. So you got to get above that candle on a close and then use that hunt for in there. If we don't get above that candle, we're just coming back into it, retesting it, coming lower. And this is all Candyland down there. And if that's where they're running right now, they've gone to the premium box, discount box, trade through that. Just stay on the algorithm. I know you've got a lot of theories. There's a lot of theories floating around out there. Stay on the algo. Stay on the horse and watch. You'll see if it's running for these highs again, you'll see it triggered down here. So if you marry the idea that it's always going to go higher first before taking you out, then you're not staying on the horse. You're trading theory on the side and you're not trading the algo. Stay with the algo. There's the retest of that SIBI broken. Now I want to see that whole price go lower. That is the rule right there. The rules to go lower. Rejection block. Pay yourself a rejection block. Move to break even. That's a risk-free trade right now in 1 minute. Perfect entry. Pay yourself at that low. Move it a little bit into pay your because this could be a retest, optimum trade entry, reversal, institutional order flow entry drill, and a continuation on the downside if this doesn't take the low. So you pay yourself here, move to risk free, and if it comes back and gets you, now here's your area you want to see. Hold price, which is also now your fair value gap. Open, pay yourself right there, done. You paid yourself twice on a perfect entry for short. Who cares about all that other stuff? Stay on the algo, you guys. Because if this takes off right now, you're going to be so happy you got in at the perfect spot. And that's just following the rules and staying on the horse. And right now, you're in a killer trade. And Hadi, if you're in that 3 o'clock one, I hope you are, man. Then you got nothing but free falling. It's a free dive. Look at that. That's already 50 handles, 40 somewhat handles. You're in profit already. And you're risk free. So you have zero stress. If it goes back against you, who cares? You've paid yourself already, and just let the rest run. And you've got big, huge open targets down below you. You can really, it's called the paralysis of analysis, right? You can paralyze yourself with all these what ifs and this could, this couldn't. Stay on the horse. Then you'll find out whether or not that's being proven, that narrative's been proven. It's like if you buy the idea that it's always going to do what you fear it happening, wait for the confirmation of that fear. And right now, she's on a free fall. So next target right here at 499. $482 says Hadi. 482. Look at this hourly here, Hadi. You see that gap? That's the new week opening gap. Watch it tear down there at 455. See if this was just ones and zeros and you just followed the rule and bought right in there at that perfect entry at 581, is it? 580, 50. If you would have bought right there or sold right there, just followed the rules, ones and zeros, took all the emotion out, we'd be in a massive trade right now. You're over 100 handles in already in a matter of 5 minutes. Just following the rules. But how many people follow the rules and forget all the emotion that's involved, all the speculation, all that other stuff? Just is not showing you ones and zeros. If you're a robot, you would have bought that, sold it, paid for it, moved your stop loss, and now you'd be in to take profit model 1, 2, 3, whatever you're going to use. Keep your eye on this level right here, Hadi. Look for that gap. Look for, split it up into quarters. Look for 25, 50, 75% and leave a small portion open and then turn around. And that would be, what would that be if we did the challenge here? $472 would be 75%. 472. Which is right there. 472, which is like 47. We just hit 471 on the Beezer, so that's right to 75% of it. And look at the reaction we're getting back off of it here. Change in direction. You're just 10 handles short there. A little too higher, a little too early, D. But very good though. Wait for this reversal. Wait for it. Stay above there. There. Now you want to see that bounce and go. Yeah, and head back up. If it closes below there, you're on the wrong side of it. Start running. Start running. Are you in this, Hadi? Are you in it? Are you in it to win it? The psych candle, where's it going? Is it going to run down more? We still got another 25%. What's your brain telling you? What's fear telling you? What are your rules telling you? The human element of trading. I'd like to see that come higher. I'd like to see that come. Where's our carrot? We haven't influenced the market with a carrot in a while. I'd like to see us come back into here. If we close below here, then look for a fill, then forget the carrot. We'll put the carrot down in here at 247. Watch the wick, 25. Take your wick here and do this. You want to see that hold strength at 25% and start running higher. If it eats through 50, then that's the next target, 453. We're below this level now, so I'm weaker, not stronger. So I'm out of that idea right there. We traded through it on a close. So now you want to see continuation. We're through 50% here. Keep on coming lower. Looking for that 53 down here. Uh, 450. So it's got to hit the carrot. And then if we close below the carrot, we've got all this potential retracement back into right here. Retest this first presentation for value gap again. That would, all of this would be still viable for a continuation on the downside after tapping that, after getting below that 450 level. There you go. We're below the 450 now. Now you want to see it close down here, because our next target is Mark 3. Can you see that Mark 3 trade now, Hadi? There's so many of them. I said, like, if you would have loaded up with 6 handles, 5 handles, 4 handles, and your profit would be at the last one, next one, profit would be at the, you know, pay yourself at that one, move your stop loss to the previous one, bing, 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 all the way down. You'd be making a killing right now. And you would have had a perfect entry right here off of confirmation. That's crazy. I'm looking at this thinking, if I followed my rules and said I was in a take profit model 3 and I was out right there, and then you wait for it to trade below it and you say, if I can get back into it, I can get back in sync with the market going lower. I'd say it drops down, and you say, well, if it takes out this low, it does, and then retest that low, I can get back in sync with the market for continuation. So you would have been out there, confirmed that the market's still going lower. Right here, you would have been in, and you're still following this down. Following just ones and zeros, taking all the emotion out of it, just trading pure. I'm out of my trade. I'm on the wrong side of this. Get back in sync with it. Can't get it here. Right here. Catch it here. And if it's really aggressive and you wouldn't have caught any of that stuff, then it would have just been running, taking off on you, right? I wanted to see us get back up into this level because I wanted to see that first fair value gap form below this consolidation area here. I wanted to see this get retested. That was the reason I wanted to see it run back up into that level. You don't get that one, but you do get this one. So you got to look at it as that fair value gap forms. Did you get an institutional order flow entry drill? Nope. Does another one form below that? Then that's the one you start to look for a target for continuation. So now I've got to break this market structure now for me to get back into this range. And then it will be just a simple take profit model 1. Because again, look at those highs. Once I get above here, then I'm looking to target inside that range, wait for this premium box to get broken through, and then run higher if we're going to go higher. But that's the bull trap right there. And always keep in mind, on the hourly, we are inside this range. There's a premium box and there's a discount box. You've just filled the discount box right here. If this reverses and takes this candle out now, I told you this area has been untested. You may get a big run back into here. You did get it here, I agree, but all that area has not been tested. So if we do get this sudden reversal, look for that area up there. We'd have to break these old highs out here though. Back inside this range, we're retesting the little bull trap here. Change. These, like, all we've got is SIBIs on this side. We have no BISI on this side. So you have to wait for the structure break. I see your 24,400 a D. Macro is about to begin. Yeah. This is a macro beginning. This would be a nice little come on back there now. We have the retest right there. We've got one right here, traded above it. We've come back inside, got that long, got this long inside this range. So that would be your like good entry right there for inside this range to hunt that 50, 62%. Wait for it to get above here, then get back in sync with continuation on the upside. So you've got two reversals that's occurred here right now inside this range that you could have milked. Even inside that range there, you could have taken entry 50%. Let's look at this here, so just so you can see. That's how much this thing is. Take profit model 1 would be a smasher internal range liquidity. So here you're below 50%. There's your reversal. You're in it right here. Continuation 50%. Pay yourself. Take half off. Move your stop loss to break even. It would have been sitting down here looking for break even. 62%. Move to 50. 70%. Move to 62. And that would have got to 75% before it came back and took you out at 70. So you would have made all that little run from in here at 58 all the way up to 504. So almost 50 handles. It was 46 handles. That's not bad, hey? 46 handles in 3 minutes. 2 minutes. 1, 2, done. Now you wait. Now you've done your internal range stuff. Wait for it to break out above or below. And you're just nibbling 50 handles at a time out of the market. Yes, that's crazy. Even in that small little range there. But that's trading ones and zeros and not and just sitting tight off the algo. Ollie, did you happen to see, I'm going to be closing it down shortly here. Ollie, did you happen to see any double SMT this morning? No, nothing. Okay, thanks. I was for hours playing with the AI yesterday to do a setup for me. It recognized my setup. It recognized, even word for word, spouted it back to me, knew what it was looking for, and it was making assumptions about what candles were called. And I thought, you must be tapping into the ICT stuff, because the algo or the AI every once in a while would say, this is a really excellent AI or a ICT trade thing and setup. I was like, ICT? Okay, you obviously have got tapped into ICT's verbiage, its vocabulary, and it understood the different levels. I put a diagram up there and say, tell me what you see. And it literally went through and described a bunch of stuff. And I was like, holy crap, this is amazing AI. And then I'm like, okay, now, print me the code for this. And we got so far for hours, and then it got into a loop. I even started understanding code in the end, because I started going, no, this syntax error you've got here, it repeats after we do the same. We're in this loop now. You fix this problem, it creates that syntax error. Fix that syntax error, and it creates this loop. And I'm like, can you not fix this loop? And it says, I see that that's wrong. Here's what you need to do to fix it. So you try to fix it, and then another syntax error pops up, and you're like, for damn it. And it just kept looping around. So I went, screw this. I went to bed. But at least it recognized the trade setup. There you go. So now we're looking above here. You've got one entry, two entries. Now we're looking for this to take out the high. It is. That's good. Now you want to see it come back and just tap this and then start running higher. This would be nice to leave this all untouched down here now. Remember, discount array's been hit. Keep that in mind. If we trade back above here, keep all this in mind right here. And we may not go lower today. We may go there Thursday. This could be a whole Wednesday running up into here, hit this level, and then roll over, and we see a Thursday reversal into this, and we start catching this on Thursday. So all those people that are short right now, they're going to get squeezed, and look for the premium box. Just saying. When I land in Toronto, we'll see if that unfolded, if we did get back there, because we got a 930 reverse. No retest of this candle. No institutional order flow entry drill. You're already inside. So if you're in this trade for a long, you pay yourself at these rejection block old high. You're moving into your stop loss is moving into break even plus the cost of the trade, and let the rest run. Kind of like I did earlier on that first one over here. This run up. Same thing. We're doing the same thing here, aiming for the old highs now. And pay yourself. So if we're looking at the box to box trade, here's your box to box trade. There's a small one sitting right there, right inside that little fella right there. And you also have the overlapping ones on the opposite side here. So I'll put the box in here so you can see what it looks like. that's the box you're aiming for. That would be another box-to-box trade. I like that word squeeze. Giving them the squeeze. Instead of phrase from old Joey Two Fingers. I'm giving you the squeeze. Joey Two Fingers. I like your long, Ollie. I like that long idea. I really like that long idea. If we can get up on top of that. If we can get up on top of this, then look for up here. I'm long 495. Good for you, Ollie. Do you have a take profit model, Ollie, or do you just have an upside target you're looking for? I'm sitting at the bus stop at the breaker. Right here. Yeah. So you're into the premium ray. You've retested that level we're looking for back here. Remember I had the carrot up here originally. We wanted to see it come back into this low, this SIBI here. And then you can, ideally, you want to see it take this and then press back into that level. But now we're pressing back into it. So if that reverses here and starts coming lower, you got to change in direction. So you're back inside this range right now. If that closes below there, you're back inside this range. So now we're going to start squeezing Ollie now. Squeezing Ollie's trade back here at 945. Got to close below here though. It didn't. So Ollie's like, you take your squeeze. You can shove your squeeze. There's no squeeze for me. I'm doing the squeezing. So now looking for this. There is no trade close below here, so he's still long. You want to see that close above this first presentation right now and start pushing higher. And that is going to be it for me, you guys. I'd like to stick around and see some more, but when I get to the airport there, I will I'll get back on the Telegram channel. I'll chat with you guys on Telegram. All right. So until I see you guys tomorrow, and until I see you guys later on today, a few of you guys. Otherwise, have a great day. Keep it safe. Keep your stick on the ice. Be kind to each other. And I will see you guys bright and early tomorrow morning live from the Toronto Trade Summit. We'll see you then. Thanks, guys.